Hello and welcome to the Global View on this Friday. I'm Andrew Gagan. Good to have you with us again here at AusBiz. Let's get across what we saw on global markets overnight, mostly higher, although Europe's stock 600 index was dragged lower by healthcare stocks. On Wall Street, the S&P 500 and Dow notched new record highs as Nvidia's earnings results and outlook continued to reverberate through the market. Shares of Nvidia dipped after US-China trade uncertainties weighed on the stock. However, Chief Executive Jensen Huang has dismissed concerns about an end to a spending boom on AI, saying a new industrial revolution has started. The AI race is on. We see $3 to $4 trillion in AI infrastructure spend by the end of the decade. Or other AI heavyweights gained, including Alphabet, Amazon, and chipmaker Broadcom. Data analytics company Snowflake surged after raising its forecast for fiscal 26 product revenue, citing AI demand. HP rose after beating quarterly revenue estimates on growing demand for AI-powered personal computers. Elsewhere, Nike shares slid after the sports apparel seller said it was cutting less than 1% of its corporate workforce as it struggles to reclaim market share. And packaging food company Hormel Foods tumbled after issuing a downbeat quarterly profit forecast. Federal Reserve Governor Lisa Cook is suing President Trump, claiming he has no power to remove her from office. The outcome of proceedings likely to have implications for the US central bank's independence. The president has accused the Fed governor of committing mortgage fraud. If she was to be removed, her departure would allow President Trump to name an ally to the Fed's 7-member board as he agitates for interest rates to be cut. Well, the US economy grew faster than initially thought in the second quarter, expanding at an annualised rate of 3.3%, in part driven by business investment in intellectual property such as AI. Personal consumption was revised higher from 1.4 to 1.6%. Meanwhile, weekly initial jobless claims were steady at around 229,000. US Treasury yields were mixed as some investors took profit from the recent rally on the 2-year note, the yield on the note at rising to 3.65%, the 10-year falling to 4.2%, and the US dollar index was down about 0.4%, the Aussie dollar having climbed to 65.3 US cents, and Bitcoin is trading above 112,000 US dollars. Oil prices have risen after Russia launched its deadliest attack on Ukraine's capital since July, with missiles and drones killing at least 21 people. Brent crude futures up almost 1% at $68 a barrel. Copper rose 2%, iron ore 1.5% higher at $104 US dollars a tonne, and gold hitting a 5-week high supported by a softer dollar and safe haven flows. Spot gold up around 0.5%, $3,416 an ounce. Let's now turn to what we're seeing on Wall Street, and we're joined by Steve Sosnick, Chief Market Strategist at Interactive Brokers. Steve, welcome to you. A bit of a different approach because we're talking to you on your Thursday later in the week, and of course it was all about Nvidia yesterday. That continues to move markets, it would seem, today, although not a lot of movement, it has to be said. What did you make of what you heard, particularly from the chief executive, as Nvidia obviously is that bellwether for the broader AI thematic?
Good morning, Andrew. Yeah, it's a different day of the week, but we can pick up our conversation where we normally leave off. Jensen Huang, told an optimistic story, and he kind of has to because, Nvidia is enormous. And so, yes, its growth rate is slowing from 56% to 54% is the target next quarter. But you got to realize that these, the numbers that we're talking about are so insanely huge that it doesn't take much to keep this, it takes a lot, I should say, to keep this company going. Remember also the stock put on about 30%, since its last earnings report. So there was a lot of good news priced in. It seems as though the market, took the numbers in stride. Good enough was okay. And obviously, when you're talking about numbers that huge, when you're talking about magnitudes, and when he throws out numbers like $3 to $4 trillion of AI spending over the coming, however many years, the market's going to like that.
Yeah, well, and that's certainly, as you say, I guess he has to be optimistic because they've got a lot to beat, haven't they? So what, though, of that potential drag to China, given obviously they can't sell the H20 chip into China, and also the government looking at taking a 15% clip.
That was a fascinating one because their revenue forecast at first looked kind of weak in a sense because this company has to be better than expected to run in place, and the revenue estimate was more or less spot on of what analysts were expecting. But then they dropped in there that it didn't include anything for China, and it turns out they hadn't been selling anything to China. And furthermore, they dropped in there that, oh, by the way, this 15% number that's being thrown around, it's not official, and we don't actually agree with it. And so there's going to be some real back and forth here. On the other hand, he seemed optimistic that they could sell the new Blackwell chips in China. So, there's a whole set of issues going on. I think it points out some of the difficulty in trying to pin down what our government sometimes is up to when it comes to some of these companies. But they seem to. They put in the 10Q that they dispute the 15%, that it's not actually an official. But then there were some comments that seemed to allude to the idea that they would actually dispute it if it tried to get put in. So there's a lot of moving parts here. Nvidia and China will remain somewhat of an open question for some time.
Now, of course, those mega cap tech stocks continue to drive the broader market higher. Steve, in fact, we had the S&P and Dow hitting records again, as I mentioned there. Are you comfortable with those valuations? Are you likely to stay fully invested at this point?
Here's the problem. The market mentality right now is so strong, you pretty much have no choice. And that's a difficult place to be. And, all along I've been saying that, don't fight the tape, but insure against it. And insurance keeps getting cheaper and cheaper because volatility keeps getting compressed. Actually, what I think we're starting to see from some customers is the idea that they're underweight some of the big cap stocks, but they don't want to underperform the index too much. So what they're doing is actually hedging their FOMO risk by buying out of the money calls. And so even though volatilities are relatively cheap overall, and out of the money, there's still always a bid for out of the money puts, but we're actually seeing some bids for out of the money calls. We have been seeing them all along, but those were more on a speculative basis. I think now actually we're seeing them almost as a hedge against missing out by investors who start to feel these valuations are a little lofty. But right now, the market psychology is such that pretty much any piece of news that's thrown at the market, no matter how ugly it might seem, can be glossed over with a positive spin, and that defines a lot of the trading that we have been seeing.
Steve, at a macro level, what are you seeing with the US economy? Obviously, that GDP having been revised to 3.3% in the second quarter. Some key data coming to us in the form of PCE read tomorrow, your time as well. What are the expectations?
Expectations are for 0.3% month-over-month rise in core PCE. It's a little tough because they report these things in single digits, but they really need a second digit in there to tell you what's going on. On a two-digit basis, that number's actually been creeping higher. So it's tough to say exactly whether people are expecting, let's say a 2.6 or greater, or whether they're expecting 3 to 3.5. So I think there's going to be some nuance in it. But it's important to bear in mind that we have a 3-day weekend coming up. And so I called today pre-holiday trading. Tomorrow will be very light. And, I think people, once that number gets released, barring anything catastrophic, meaning, let's say over 3 and some concerns there, I think you're going to see the usual light trading and the old don't short a dull tape comes into play. We've been seeing these ramps, particularly on Friday, because of all the expiring weekly options. And so, the path of least resistance remains higher. But this number tomorrow is critical. It's important to remember that with all the rate cut talk that we got after Powell's Jackson Hole speech, that I'm going to say very quietly, but not quietly, he did highlight it, but the market chose not to really listen to this part. And that is that the Fed more or less reaffirmed a 2% inflation target, not 2 point something, not near 2, but 2.
Yeah.
And these numbers have been annualizing to something greater than 2. And so it will be interesting to see, although he was leaning toward the labor portion of the dual mandate, it will be interesting to see what happens if prices start to present a problem because, again, just back of the envelope, 0.3 annualizes to 3.6. If you annualize the last 3 numbers that have come out, they annualize to about 2.6. And we're probably going to replace the 3-month-old number with a newer number. So that number's probably going to go up. Let's see what the Fed has to say about that.
All right. Meanwhile, what do you make of the politicization of the Fed then? Steve, obviously, with attempts by the president to dismiss Lisa Cook, she's suing him. It goes to the very independence of the central bank. Interesting to see the fallout there, particularly, I guess I see, obviously the downward pressure had been exerted by the president on interest rates, but how that's likely to affect the US dollar at the same time.
Well, that's the key here. There's 2 things to watch, and that's the U.S. dollar, and that's the shape of the yield curve. Today, actually, and you alluded to it earlier when you started the program, that the yield curve basically flattened. 2-year yields rose while 10-year yields fell. I believe that was largely the result of Lisa Cook's willingness to fight back, and the market's realization that this is not going to happen all too soon. The key to watch with the potential politicization of the Fed, I can't necessarily say it, but that is that I would look for a steeper yield curve as the tell that international investors particularly do not want to be a part of this, because what it would mean would be you would expect to see lower rates. We already have sort of a terminal rate in the 3s priced in. You'd see from where the 2-year note is, but then we really, it's still only about a 55 basis point spread out to 10 years. If that rate comes down in the front and it's perceived that the Fed is basically not at all concerned with inflation, despite saying otherwise, that would lead to a much higher 10-year yield because inflationary expectations get priced in, and that goes up. Also, you'd see money flowing out of the dollar because A, of lower rates, and B, people not wanting to own those assets. The flip side, of course, is that there's some thought that the Fed might try to institute QE, a very compliant Fed, and just buy back the long-term bonds, more or less Japanese-style yield curve control. So there's so many moving parts here. Bottom line is, it's very tough to keep up with the political events going on surrounding the Fed. There's some other stuff going on with the Centers for Disease Control. It is a fairly tumultuous time trying to keep up with all the various political cross currents. But the market, they just hear lower rates, and lower rates, good earnings from Nvidia, and off we go.
Well, you do have a 3-day reprieve. Enjoy the long weekend. Steve, thanks for joining us from Interactive Brokers.
My pleasure, Andrew. Talk to you soon.
Let's turn to the local market. Just before we get going, we are expecting a lower start. SPI futures off by around 0.33%. Join us in just a moment as we get across the open.